On the show today, we'll discuss the progress of Nigeria's fertilizer industry. As always, you can join the conversation with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Ubodaga. Now, the International Finance Corporation, the IFC, recently announced a $1 billion debt financing for Indorama Eleme Fertilizer and Chemicals Nigeria for the construction of a new fertilizer line that will expand its capacity of urea fertilizer to more than 2.8 million tons. Essien, IFC's country manager for Nigeria, joins me to discuss this deal and the progress of Nigeria's fertilizer industry. Thank you so much, Emma. Always a pleasure to have you on the show.
Nice to be here, Esther. Thank you.
So this is another big deal, $1 billion US. But before we talk about the deal, I'd like us to briefly reflect on Nigeria's fertilizer industry, where we were before and how now that we've gotten to the point where we're actually seeing traction and progress. Just briefly, what would you say were the interventions or those major turning points for the industry?
Well, as you know, Nigeria's had very grand ambitions around fertilizer for quite some time, and the major reason is because Nigeria has quite abundant gas and can be a low-cost fertilizer producer. But in addition to that, the impact of fertilizer on the agricultural sector is enormous. And so those ambitions have been there. When you think about the agricultural transformation agenda that happened in the previous administration, fertilizer reduction was a key part of that. I think what we've seen over the past few years is really an embracing of fertilizer as a key part of the industrialization agenda. And so companies have been able to feel comfortable to bring in international capital to build these very large industrial projects. These are projects that are going to be around for 30, 40, 50 years, if not longer. And so that sense of the improving investment and climate for these companies has been, I think, the biggest difference. And as a result, we've seen quite a bit of capital come into Nigeria to support those projects.
Okay, now for the industry players, we only have about just two of them, Indorama and Dangote, but I know that in terms of capacity, they're actually ramping up capacity. Do you think that for these two players, it will be enough in terms of what the capacity they're ramping up to and the local demand that we have? And of course, there's always the opportunity for exports.
Absolutely. Well, exports is a big part of this. And I think, so there are two things I think to keep in mind when we think about the fertilizer potential for Nigeria. So one is domestic consumption, which is, again, very important with respect to food security or food insecurity, as the case is in many parts of Nigeria. And what has happened in the last couple of years is, again, a recognition that there needs to be some intervention to make sure that fertilizer prices are affordable, and then farmers are using the right types of fertilizer. There's no point to use fertilizer if you're not using it in the right way and it's the right type of fertilizer. So there's been quite a bit of an initiative in terms of awareness raising for farmers to make sure that they are using the fertilizer appropriately and making sure there's greater access at affordable prices. So this presidential fertilizer initiative has been a big change in that regard. It's really been able to help address. Now, there's a long way to go, but it certainly has put fertilizer in the hands of farmers and allowing them to use it properly. Nigeria has, in terms of fertilizer consumption, is somewhere around 25 kilograms per hectare, whereas global averages are around 135 kilograms per hectare.
Well, that's a huge gap. That's a huge difference.
Absolutely. So there's a lot of latent demand. So they are using it, but there's a lot more that can be done in terms of fertilizer consumption in Nigeria. So that's one piece of it. It's a critically important part of it. The other part of it is the potential to produce fertilizer here. Again, Nigeria is at when you look at the cost spectrum for fertilizer, Nigeria is at the low end of that, which is great. And so it means that Nigeria has the potential to become a global player in the fertilizer industry. And that then helps with the overall industrialization and diversification agenda that the government has. So it really does kill two birds with one stone if we can really get projects like this up and running and demonstrate that you can have global standard fertilizer capacity in Nigeria.
But what about, local demand? If we're not using enough, compared to global averages, I'm thinking, how do we begin to sort out that aspect of the equation where we get farmers? I'm not sure if it's an access issue or the farmers are just not using as much as they should to increase your crop yield.
Well, it's both. I guess it depends on the particular situation, but it's definitely both. Part of it is awareness raising. And so companies like Indorama have actually a program where they go out with their farmer extension services staff, and they go out and they educate farmers around how to use fertilizer. So there is an awareness piece of it that is critically important. And so they've been doing that, and that I think has been largely successful. There's, I think, a lot more that needs to be done. This country has, I think, 50% of the workforce is involved in agriculture in some way, shape, or form. So there's a lot to be done in terms of awareness raising. And just the sort of the socialization around how to use it, timing, et cetera. Convincing farmers that they need to think about not just the short term, because a lot of them are farming for self-sufficiency, but also the medium term. And the only way farmers are going to get comfortable with that is if they have some sense of comfort that there's a market beyond their production. So there's that piece of it that's critically important. And it's going to take some time. We won't get there overnight. And the other piece of it certainly is affordability and access. And again, one of the other issues that I think this agenda has been able to address is cutting out a lot of the middlemen who were in the system. And you have farmers who are in remote places and really don't have access to market prices. They are dependent on these middlemen, and oftentimes having to pay really high prices. So this overall agricultural agenda has been able to cut out a lot of those middlemen, and so now farmers have access to the inputs themselves at much more affordable prices. So this initiative has brought down prices about 35%.
Now, I know that it's good that we're, especially on the export side, but do you think that we're focusing so much on ramping up production for the sake of being able to export the fertilizer and become, a global player, as it were? Because at the heart of this, a big part of the conversation is also food security, having better crop yield, better crop yield, and getting more farmers to use more arable land, and of course that means use more fertilizers to get more food, to ensure that we have more food to go on, especially as the population expands. Do you think that perhaps we should put more focus on that, ensuring that on that side of things we should ensure that farmers do get?
It's a very good point, because I think when we invested in the first line of the Indorama project several years ago, the expectation then was that pretty much all of the production was going to go for exports. But what happened was that you had this new initiative, this presidential fertilizer initiative, come on board, and the result of that was that a very significant part of their production actually went into the domestic market, right? So I think what you need to have is an alignment of policies that enable the private sector to do what they're going to do. They're going to produce and they want to sell at the end of the day. So I take your point. There's certainly a lot more that can be done here in terms of increasing that latent demand, right? So we need to get to the point where we're at global averages of consumption. And certainly the production coming out of Nigeria should be supporting that demand. And I think that can happen. The other piece of it, by the way, is for the region. ECOWAS region, where there are significant food security or food insecurity issues. And so there's certainly an argument around how we get product into those economies, because they're just next door. So a lot of this will have to do with the other barriers that we see in terms of the overall agricultural sector, overall market linkages, structural issues, infrastructure itself. All of these issues are really major impediments to seeing fertilizer from Nigeria going into domestically and then also into the region.
Okay, let's talk about the 1 billion, let's bring IFC in now, $1 billion debt financing for Indorama. Tell us about this deal. And I know that there was a similar one in 2016. How does it differ from that one?
So again, in 2016, Indorama came into the market and basically bought into an existing government asset, and then were able to, alongside that, build a greenfield fertilizer plant. By the way, it's the largest fertilizer plant as of today globally. So again, if you look at the global landscape for fertilizer, urea in particular, Nigeria has the largest facility, and it is quite a facility. Really state of the art. You would know, you couldn't place it in any particular country if you saw it. It's really state of the art. And so when you do a line like that, the vision is always to then build another line, and even a third line if you can. And so when they went into the project, and when we thought about supporting them in their first project, that was always our intention, that they could actually double it. But you never know until you see how successful they've been in the first project. And so what we've seen is quite a bit of an ability to understand the market dynamics, to really get that plant up and running. Again, as I mentioned, it's a state-of-the-art facility. And so it was almost it made a lot of sense to now take that project and double the capacity of it. Particularly, again, if you think about the role that Nigeria has with respect to its gas reserves. It's the 9th largest gas reserves globally. And so the feedstock going into into this urea, this fertilizer, is very inexpensive. It makes tremendous sense for Nigeria to be a global player in urea.
Well, would that make, reduce to perhaps significant extent our gas flaring?
So that's another important point, and one of the reasons why we were very keen to support this project, and we'll look at other projects as well. Nigeria has a commitment to reduce its gas flaring quite significantly by 2030. Nigeria was flaring about 750 million cubic feet of gas very recently, so that's the 5th largest, I think, gas flarer globally. And so, so you have government commitment to now reduce that gas flaring, and now you have projects that can come on board that can then take that associated gas and then monetize it. It really is it makes a lot of sense. And so, so yes, we expect to see quite a reduction in the future of gas flaring, not just because of these projects, but also what's happening in the power sector and other sectors as well.
Now, I know this is usually a syndicated loan where, you bring on other partners, European banks and from other regions, and also development finance institutions also. We're talking earlier about the syndicated loan market. Help us understand the trends right now, what's changing or what's different right now.
Well, I mean, listen, for a project that has a very strong sponsor like Indorama, the credit is good. When you look at the overall credit analysis, it's very strong. When you look at the fact that a project like this has an existing project to rest on, there's an existing project that's already there producing, generating revenues. For projects like that, it's not difficult to identify syndicated banks who want to come on board. It really isn't, because they understand that this is a solid credit. I think there's still a keen interest in the syndicated market and looking at Nigeria. But Nigeria has changed. Maybe the syndicated market has changed somewhat, but Nigeria has also changed a lot. Just emerging from the recession, the opportunities are now fewer and farther between. Okay. And so when they identify a strong credit like this, it really is not a difficult ask to get banks to come on board.
Especially since, 2016, they've had, I guess, they've built a good track record.
Absolutely.
Hold that thought for us. We'll take a quick break, and we'll be right back to pick up from where we left off. I've been speaking to Essien, IFC's country manager for Nigeria, looking at Nigeria's fertilizer industry. Still with me is Essien, IFC country manager for Nigeria. We're continuing our discussion on the fertilizer industry in Nigeria. Emma, thank you for your time so far. So, when one looks at Nigeria's agriculture industry, definitely fertilizer is a major input for crop yield. But we've talked about, areas that need to be, addressed in terms of, local demand for the fertilizer itself. But I'd like to hear your thoughts on other projects that IFC is interested in, some good projects that you perhaps have in the pipeline or you're trying to identify within the agriculture space.
So agriculture is one of our pillar sectors for IFC. We recognize the role of agriculture in the Nigerian economy. It's huge, and keep in mind also that in the last during the recession, agriculture was the only real sector to grow. It grew about 4% when the rest of the sectors were actually in contraction. So there's really strong potential for the agricultural sector going forward. We are keen to look at, so we're looking at sort of two sets of types of projects. Some that focus much more on smallholder farming. Okay. So those are going to be smaller projects. Very interesting because, again, that's where you have most of the employment impact. Very difficult, though, as well, because you do have quite a bit of subsidized and concessional financing coming into the agricultural sector. There's a lot of money being pumped into the sector, and certainly there's a lot of need in the agricultural sector. Agricultural businesses certainly cannot borrow money at 18, 20-something%. So it makes sense for them to be able to have some sort of access to concessional financing. But it does make it hard to identify projects that can be sustainable going forward. So there are some small, sort of smallholder projects that we would consider that we're looking at that are possibilities. But those are projects that, frankly, they'll all struggle to scale. In part because they tend to be, in certain parts of the country, so they will take advantage of those particular dynamics, but will struggle to really get to the point where they can actually scale. That, I think, is where the interesting projects will be. If we can identify, and I say if because we're still in the space of looking for them, projects that are large industrial mechanized projects.
Do you see a lot of that? When you just look around across the landscape, do you see that?
No, not much. We've seen a couple that have been interesting, but have not. They've not materialized. Or rather, let's say, fully private sector projects, right? I think there's some government supported sectors out there for sure. There's some large government supported sectors that are that you can argue are at the sort of industrial stage. But when you're looking at a pure private sector play, there are very few opportunities. I think really the thing that we could potentially do is interest one of the larger agro-allied companies to come and partner with a local Nigerian company and really flesh out an opportunity, let's say in cassava. Cassava is a very interesting value chain. Nigeria is one of the largest producers of cassava, also in various parts of the country. We do have some level of commercial farming of cassava. The applications of cassava are quite diversified and varied, in particular for inputs for FCMG companies here in Nigeria. And so that's where it's going to be very interesting. I think the challenge we've had is really making sure we've had alignment between government, state government, and the investment incentives to make sure that these companies can invest for the long term. And there are always issues around land. So you really do need to have government involved.
But do you see an improvement, especially around the issue of land?
What I see is, I see governments, a few governments, some of the very forward-thinking, very assertive governments, looking at large industrial projects, and they are trying to then, by doing that, address the issue of land. So they can do it on behalf of maybe a large sort of cadre of companies that can come in. So I do see that there, and that's important that they come in and they do a lot of the groundwork to make sure that that issue is not going to be a concern for investors coming on board. That in and of itself is a huge sort of lowering of the entry barriers if they're able to do that.
So just like setting up a good foundation to just make it look viable. Of course, it has to be viable anyways at that level. Exactly. Well, for you, we talked earlier about the challenges around scaling, being able to scale, across the value chain. And I wanted to hear your thoughts on what you think remains those key challenges. Why farmers are still not able to scale.
It's a good question, maybe $1 million question, I think, considering that there's quite a bit of expertise in the farming sector and the agricultural sector here. My sense is that I think over time we've sort of lost if you really want to think about big agricultural projects, again, they require quite a bit of land. And so you have to kind of go into it making the assumption that you're going to bring in a few investors and they're going to lean in really hard, and they need to have a time frame of 10, 20, 30 years in order to feel comfortable to come in. First of all, let me just say that the agricultural sector is a challenging sector. So for those people who are disturbed that Nigeria hasn't done more in the agricultural space, they should recognize that it is a very challenging sector. IFC is the largest investor in the emerging markets. Our agribusiness portfolio is less than 10% globally. And if that's
the other countries or regions
absolutely.
Where you do it.
Big countries like Brazil and et cetera, these are our global portfolio is less than 10%. And so that's just an indication of how challenging it is to do agriculture, even in some of the countries where agriculture has been a mainstay of the economy.
Okay,
so it's a challenging
sorry to bother you. If when you look across the regions, you talk about 10%. What would you say is that one or two common denominators that just run through?
Well, you have consistency. So you visit some of these farms in some of these big these countries that have been invested in agriculture for a long time, and they tell you that this farm has been here for 50 years. It's a 40-year-old farm. So they've started this operation 40 years ago, and they've continued to innovate over time. And they've continued to build, and they build machinery for that particular farm. So they've had this, they have a track record. You can't jump into this overnight. For example, I looked at a tomato farm in another country recently. It was an enormous farm, and this farm had been here for 40, 50 years. And you can see how, and they have innovated on everything, on irrigation, on every possible thing, in order to get to a point where they are able to make sure that when the tomato is ripe and when the tomato gets processed, that time is actually, they've limited it to the minimum amount of time possible, certainly less than 24 hours to get that tomato processed. It doesn't happen overnight. And so that consistency is key. We've lost a lot of that because, we've lost the focus on agriculture. So a lot of that is coming back, I think, slowly. Unless you have a lot of that in the system, it's going to be hard to get to scale. But I think we should be encouraged that there is so much more focus on agriculture today than there was 10 years ago. You see a lot more young people interested in the sector. And so I think we should be encouraged that over time we'll get there. It will not happen overnight. It certainly won't happen overnight. But we do have, I think, things moving in the right direction. But we do need to make sure that we have sustainable ways to invest in agriculture going forward. That needs to be critical.
Okay, now back to fertilizer. For a company like Indorama, I mean, it's huge. This is huge for them. Now, this could, you say that they could actually double capacity. So obviously that gives us a very good footing in terms of being a major player in terms of exports. And of course, there's also the Dangote plant there too. So what does this do for us if Indorama is able to execute this and get from point A to point B with this project? What does that do for us?
Well, it's huge potentially. So Indorama will double their capacity, go to 2.8 million metric tons. The Dangote project is supposed to be about 3.9 metric tons. The combination of that potentially puts Nigeria at a place where they are anywhere from 10 to 15% of global production. So Nigeria can soon become a major global player in urea production. That is huge. That is something that it'd be a huge development for the country. And then the implications of that are obviously helping the industrialization agenda and the diversification agenda. And then also other international players seeing Nigeria as a global player hopefully will attract other investment. We actually see quite a bit of potential, not just in fertilizer, but the entire sort of downstream petroleum subsector. The refinery as well, Dangote's refinery is coming up as well. You have other modular refineries that are coming up as well. The opportunity for Nigeria to diversify also into downstream petroleum away from crude oil is huge. And so when you add all this stuff together, you really see, and the interesting thing about it is that when you put it all together, the dynamics of these sectors are very different. And so the global trends are very different. So what might hit one sector may not hit another one. And so that's a positive thing. And so, yeah, I mean, Nigeria can become a global player in the urea sector very soon, in the next 2 to 3 years. In addition to that, can really become self-sufficient in a whole host of different downstream petroleum sectors.
And you think foreign investors will look at that project and say, okay, fine, this is one project coming out of Nigeria that was successful. I mean, they were able to pull out, getting good financiers, as it were, blended or otherwise, and were able to pull it off.
Yes, but I want to make one sort of side point, and that is, there's one thing to bring capital here. There's another thing, or a global player to bring capital here. There's another thing to make sure that global player can export their capital when the time comes, right? So these are global investors. Some of them are global investors. If they're going to bring their capital in, they have to be able to export their capital over time. Okay, and so both of those pieces have to hang together, and so the government needs to make sure that they facilitate those that export of repatriation of capital in such a way that is in line with what has been agreed up front.
Are there usually issues with that?
Sometimes there are issues. Yeah, sometimes there are issues, and that is really what will disturb investors, and it's almost an unspoken thing. But they have to have a high degree of confidence that obviously some of it will be reinvested. Obviously, that's the intent. Hopefully they will continue to expand and they will reinvest in Nigeria and continue to build their business. But they have to be able to export some of their capital as well. Otherwise, it won't make sense. So bring it in, but also they have to be able to export it in the same way. And again, there's sometimes there are issues here and there. For the most part, I think the framework is there, and so investors are comforted by that. But we need to make sure that there's that investors still feel the sense of they can invest here freely, which means that they can exit freely at the same time.
Emma, we're going to have to leave it there. Thank you so much for talking to us. It's a pleasure having you on the show. Emma, essien, Laura, IFC's country manager for Nigeria. We've been talking about Nigeria's fertilizer and agriculture sector.